What's up? What's up, everybody? It's Bubba's Bottom Line and Bubba here. And what is going on? It's daylight savings time. I hope you didn't forget to turn back your clock. And of course, you get that extra hour of sleep. You should be ready and raring to go. And maybe the market's maybe finally ready and raring to go, but not likely. As we look back at last week's action, what did we see? We saw a new Fed chair, Powell, which I don't know. I'm not a huge fan of. I'm not a huge fan of the same old. I think we've got issues, and of course, I do believe that a lot of the issues have to do with the Federal Reserve. I think that they've done a horrendous job at managing this entire situation, and of course, they haven't managed to accumulate $4.5 trillion of debt on their own, and of course, our debt continues to grow. Pushing over 20 trillion, it doesn't make a lot of sense when you look at it from a logic standpoint. But of course, nobody really cares because they hope that eventually it will go away with the continued of attempting to borrow their way out of debt, which is a total crock. But that was one big thing last week. And of course, we had the jobs number last week, which was, 261,000 jobs. I don't know. Look, the jobs stink. Okay, we can look at it any way we want, but at the end of the day, the jobs are lousy jobs that we're creating. So we've got things we haven't seen in labor since 1973, which are supposed to be positive things. I don't look at them that way. I look at them just as a continuation of trying to hide the troubles that are out there. And then, of course, I guess we would call it the biggest news of the week would be the new tax plan, the thing that we've all been waiting for. And I can say this, that I have a fundamental problem when all of my congressmen and senators are standing out in front somewhere all cheering and smiling and laughing, because then I know that I better sew up my pockets and hide all my money because they're going to be coming after it. I don't really know if the tax plan is going to be good or bad. I do know that it's going to add $1.5 trillion to the debt, something that we don't need at this particular time. I think it'd probably be better if we eliminated those congressmen and senators, and then maybe we could save quite a bit of this debt. But I think really there's nothing that has changed in the overall environment. Markets continue to go higher. There is no question. There's no issue about that. We continue to see. We're now, after October closed out, 7 months in a row. We just finished, I think, our 11th week in a row of up movement in the general markets. But I think if you look at something that not one person talked about during the week, and that would be the Russell Index. The Russell is small cap stocks. The Russell is based on the little guys. Okay, now it's not little guys like you and me in that type of business, but they are under smaller capitalized companies. And interesting enough, on Wednesday, the Russell had the biggest reversal that it's had in I can't tell you how long, years. It was up 150 ticks. It ended up going down, closing down about 100, but did get down almost 200. And that is just a monster reversal. The Russell should tell everybody whether or not they like the tax plan. And based on that trade, they didn't like it. Now, I have thought all along that the tax plan, whether it was good or bad, was a buy the rumor, sell the news anyways. But the rest of the equities managed to hold up. And of course, if you saw on Friday, Apple to an all-time new high again. So big tech is still flying. There was a big deal in tech where Broadcom has taken out Qualcomm for a big number. So, again, we're in that same malaise of the 90s. Everybody says no, but okay. Look, I don't have to be right. I think I am, but I don't have to be right. But at the end of it, when we look at it from a bigger picture, the NASDAQ exploded on Friday. The Dow was basically flat, and the S&P was up. Russell down. The jobs number itself on Friday did not do enough to drive this number. I think that there's too many problems out there that the job market does not really recognize. And of course, with the government cockeyed math of the way they track things, it doesn't make a lot of sense either. But, when you look into the crystal ball of the market, one of the questions you have to ask yourself is, have the gamblers taken over the stock market for now? And what I mean by that is, gamblers will gamble on just about anything, all right? And when we look at the way stocks are going up and the valuations and the way we bounce, it doesn't make a lot of sense. Certainly, and anybody out there can say whatever they want about the fundamentals of this market. The fundamentals of this market stink. All right, this is like a bad fish out there. You continue to ignore and put deodorant on it, but at the end of the day, we aren't seeing the real growth that we need to sustain and grow this economy. And I'm sure this ridiculous 3% GDP that they're blurping about is really just not much. And I'm sure that it will change. There hasn't been enough overall change in the economy to make things all that much better. But I think the big story here is we've got so much of a lack of fear. Complacency is so overtaken this market. I believe Goldman Sachs is going to probably stop using equity options because of the lack of volatility. Traders themselves use options because of their volatility. Well, if you take volatility down to record lows, which is about where we are, that doesn't really bode real well for anybody out there. It's not great for the market. We can continue to say that it's all great and good, but it doesn't really work out that well when it's all done. And these rallies, markets have not moved 1% down, or I think it's 1% either direction, and we haven't had a 3% down day in over a year of trading time. We just hit, I believe, the 60th or 70th record high with President Trump since he's been elected. Now that's about a third of the time. There's 241 days of trading in a year. So, just under a third, maybe I'd say 25% of the time we're making new highs. Now, what are we making new highs on? We have these overwhelming, ridiculous valuations that make absolutely no sense. You have got now a consumer confidence level at levels we haven't seen. And believe it or not, we haven't seen these kind of levels since 2000, 2001. I don't know what happened in 2001. Let's see. Oh, the market's crashed. Again, we're not telling you the market's going to crash today. We're not saying that they're going to go down forever because we're not perma bears. We're just saying that statistically, probability-wise, there's a more likely spot that there'd be a greater sell-off. Now, one of the things you have to remember about these markets is what? Markets will drift higher, barring any reason to go lower. So they don't really have a reason to go lower yet. Because why? Because our friends at the Federal Reserve, and I'm sure Jay Powell will be no different. I'm sure this will be a crock, as every other one has been. Is we continue to leave money so cheap, which then creates no place for you to go. All right. So you're having this war on savers still. Now, you may say that, well, that's not a big deal, but it is a big deal because, again, if you're in a certain age group and you're trying to live on a fixed income and you're now being forced into the equity markets, is that any good for you? And the answer would be, of course, no. So when we look at this picture and we try to justify why markets are at levels we haven't really seen since 1929, these levels we're seeing now are the same that we've seen as the prelude to every big meltdown that we've seen. Consumer confidence, a joke. I mean, really. I mean, who are they asking? 3 people on the street? I mean, the Michigan Sentiment Survey, which is a survey of 5,000 people. Well, considering that there's millions, 5,000 is not really a true representation, especially when you're taking it from one group. The numbers are basically artificial. They don't necessarily mean a lot. The real numbers that you need to know is what are tax collections, what are salaries, where are we going from there? But those are not good, so they don't want to talk about those. And there's a lot of industries that we see continuing to break down here and not do well. Now, it's not that we can't save it, okay? It's not that it's unsalvageable. I think that there's certainly things that can be done. But of course, when you continue to have Washington, the swamp, the crooks involved, it's very hard to get past this. So when we look at these guys chortling and smiling and what they're really saying is, we got you again. Here, we're going to take your money from you again because you, the American taxpayer, the American middle class, you're going to get to fund us again, and it's going to come out of your payroll and out of your check. So tax cuts aside, there's going to be other ways they're going to get to tax us, and there again lies the bigger problem. And what really bothers me is that not one pundit wants to ever talk about the debt. Now, every major meltdown has almost come from too much debt. And right now we have too much debt between auto loans, student loans, any credit card loans. We have got debt that is going to be unsurmountable when it finally comes down to it. And this is the issue. And that doesn't include the true debt that you have from a Social Security model that's broken down, that they refuse to change. That doesn't come from telling you anything about the actual factual evidence about what's going on. This is the problem that we will continue to exist under until we drain that swamp. As long as we have these guys and gals in office, you're going to continue to have higher debt and less expendable income for yourself, because I don't care what they do with the tax code, I don't care what they promise you, until they get their house in order, there is going to be no way to be able to spend the type of money. And this goes back to their model of trying to build inflation. This goes back to their model of trying to do anything that they're trying to do. Is not one thing that they're trying to do benefits the middle class American taxpayer. And that is the bigger crime out of this whole mess. And that's something we'll talk about later in our commentary. Of course, you know I've got my commentary for today, right? You can already tell I'm fired up and pissed off anyways. But if we look, and you're hearing a number that I don't very rarely talk about because I think it's a worthless number, right? But the jobless claims. Jobless claims are the lowest since 1973. Well, again, their math, their cockeyed math is ridiculous. Remember one thing, numbers never lie, only the people that report them do. So we can worry about what the numbers say, we can worry about all of these other things, but at the end of the day, okay, you don't have a true model of real growth that's going to really benefit American middle class taxpayers. You don't have anything but a plan that does benefit the rich. Now, I'm not talking about the tax plan, all right? And just remember, I'm a fan of the president. So it's not like I'm talking from the left. I'm just, as a fan, as somebody who believes in there's things we should do, there are more important things to do right now. And the number one thing is to drain the swamp. But we'll get to that in my commentary. But in the meantime, I have seen no real proof except in some major metropolitan areas that there's anything going on. And that means that people are not making enough money. That means that the average wage growth stinks. That means that the mom and pop are still not able to afford other things other than food and fuel and maybe taking care of their kids for clothes. So those are the bigger issues that are coming apart, and those are the things that we're not talking about. And I'd like to know why. That would be my question: is why aren't we talking about these things? In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz, and of course, you know that I'm trying to educate high school investing. Highschoolinvesting.com. If you check out that website, we've been trying to educate our high school kids and the youth in some financial literacy, and hopefully maybe you can help me. I've got a new link up right now, Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, we're looking for some donations to help us continue to finance it, as I've done so myself for the last 6 years. And of course, capital's running dry. And we'd like to continue to help our young kids understand the financials and how markets work and how they can actually benefit themselves as they're growing. So check that out. In the meantime, don't forget to get the Bubba Show every single day, 2 to 3 Eastern Time at libertytalk.fm. We will be stepping out here for a break, and we'll be right back with more of Bubba's Bottom Line right after the break. This is Todd Bubba Horwitz, Bubba's Bottom Line. We'll be right back. Welcome back to Bubba's Bottom Line, and it is me, Todd Bubba Horwitz, and of course, we're on a roll, we're on a rampage, and a lot of things going on that just don't make a lot of sense. And, you know, I tell you, the overall markets look sick, but they're up. Again, I'm not telling you they're not going up, but they look like dogs. All right, we've got no volume, we've got no action, we've got nobody who cares about anything, and of course, one of the things we're looking at here is the massive amount of debt. But of course, if you're Jeff Bezos, that ain't so bad because he just sold $1 billion worth of stock at a record in Amazon. And of course, I wouldn't panic. This is very similar to what Larry Page did with Google a number of years ago. And that means that Amazon has become such a big part of his entire portfolio that he needed to put some money in his pocket. And why wouldn't you want to put $1 million, $1 billion in your pocket? I can't blame him for that. All right. I don't like him, but I can't blame him. All right. But, I believe when you look at it, investors are playing with fire. I think we talked about this a little bit earlier about the gamblers coming in and trying to fire up the markets because, listen, they don't care. They'll bet on anything. And I think the average investor has problems here. I think the average investor continues to pour money into the markets, hoping that it's going to continue at these record rates. And again, I'm not saying that it won't continue at these record rates for now. I'm saying that you better make sure that you have an exit plan to get out when the music stops. The music will stop. All right, let's be fair and frank. The music will stop at some point in time. Now again, it doesn't mean it's going to stop tomorrow. It means that at some point in time, there's going to be a correction which is actually healthy for the market. This is what we don't get. Recessions and business collapses and things like that are actually healthy for the general markets. They're healthy for everybody. You cannot continue to try to push off and push away the problems that exist. That is the reason that we have a problem with Social Security, because we continue to ignore the problem, hoping that we can push it away by printing more money. That goes back to the saying that we coined right after the collapse in 2009 was the Fed and the government continues to try to borrow its way out of debt, which never works. Now, we are spending right now on terrorist groups, $250 million a day, every day. Okay, it's been going on for about 16 years. $250 a day, every day, 16 years. Now, what is taking so long to take care of the situation? It's something that I'd like to know because, again, that's a big chunk of cash that we're continuing to put out there. And for some reason, it's not getting taken care of the way it should be. Now, if you tie that in, okay, that we have many industries that are also dragging down this market. So if we look at the jobs, what jobs are really helping this market grow? Okay, well, it's all service jobs. Waiters, waitresses, bartenders, things like that. Now again, there's nothing wrong with those jobs, but in general, those are not what we would call the highest paying jobs. And of course, we know that a lot of that stuff, that tax stuff, doesn't necessarily come from those places because a lot of those are cash businesses. So now, okay, you've got lousy manufacturing. You've got wages that are not rising, and if they are rising, they're not rising at a realistic level. Okay, you've got wholesale, okay, and you've got warehousing. Those industries are typically higher paying jobs, which we are not getting. If you're not getting good jobs, how in the heck do you expect to get true growth? Again, those are the products that create growth. When you manufacture something, you have to buy something from somebody, you have to pay somebody to build it, and then you're going to resell it. It's all part of the growth package, which we don't have. All right, that is again becomes a much, much bigger problem. I think that what we're seeing here is more of a fraud and a lot of delusion of what is actually happening. And that goes back to everything that we've already said, which it doesn't make a heck of a lot of sense what everybody is telling us. And certainly now with the this time is different mentality, which really makes you want to puke. All right, even Warren Buffett has expressed some concerns at the rates where the market are. Now, the last time the markets were here was, again, 2000, 1987, 1929. So again, those are not bad things to happen to a market. Those are actually okay. They will not destroy everything. They will actually help the markets grow. They will actually help it build and become back more stronger. But when we continue to try to hide from it, and of course, the person that Trump just nominated in Powell, he's nothing more than a Janet Yellen or a Ben Bernanke. My contention is that they didn't do a good job. Now, I could be wrong. Doesn't make me right. Fortunately, this is my show, so I get to be my opinion. But I don't think they did a very good job. I don't think that they cleaned out the crap. I think that when you have a problem, and especially in the banking industry, that's the ones that need to be cleaned up. And that's where these banks, these too big to fail banks, continue to grow and wipe out the smaller banks. That, to me, becomes also a bigger problem. But at the end of it, just take a look at a few small areas. Look at the farming industry. Look at farmers and producers. We've got grain prices that almost equal the 90s. All right, we're in the 2017. We're 20 years ago. All right, other than soybeans, but corn is at ridiculous levels. If you take the equation of ethanol, which is $1.50, you get corn under $2. All right, it's a joke. All right, you've got all kinds of things that don't look right, yet they continue to debate us and tell us how good everything is going around us. To me, I think that's, again, a crock because it doesn't make sense. The numbers, when you look at them, they don't add up to what they're supposed to add up to. But the interest rates were starting to rise. Now, they fell a little bit late in the week, and I do believe they're going to continue to rise. I think that oil has been, and all of a sudden it went from the worst, now it's become the best. And when you think about it, what has actually changed in the oil markets? All right, because Saudi Arabia is trying to get this IPO of Aramco out. So now all of a sudden, oil is worth all this much more money. Now, here, let's look at the facts. We've got in this country a 200-year supply of oil, and that is without affecting the environment, right? Which means we've got probably a 1,000-year supply. Now, if we're still using oil in 200 years, if we're still using oil at the rate we're using it now in 10 years, that would be a crime. Because again, we don't need to, and of course there are better, more efficient ways to do things. So that takes care of, but of course, as long as big oil is involved in the government, that's going to continue to keep big oil on the front page. So you see things that are illogical from a market standpoint of why they're doing what they're doing. But of course, we know from we talked about a couple of weeks ago that the Saudis had approached somehow the shale producers into slowing down their production. Of course, they have. Now, I don't know how much longer the shale producers are going to wait to start to push out oil, but I can't imagine with oil at $56 almost that they're not going to start, pumping it out and selling futures again. It just doesn't make, again, it comes more from a logic standpoint. And that is something that I have a big problem with from a standpoint of just, again, simple logic. It's like it doesn't make sense, but yet they continue to push. There are so many things that need to be addressed that are not being addressed, that it becomes sad that we can actually let things slide by and not nip them in the bud, as Barney Fife used to say. We need to more act on what's going on and put ourselves in a better position. In my eyes, they continue to put us in a bigger position of failure. In my eyes, they continue to destroy the American middle class. So if you want to wonder why the retail ice age is happening, it's because you're destroying the number one customer. All right. Now, they can tell you about how good auto sales were last week and other things. Let's not forget that we had two major hurricanes in this country, all right, that destroyed autos that have to be replaced. So again, are those really being bought because we've got all of a sudden demand, or because we've got more money? No, because it's done out of necessity. So again, these are the issues that are out there and that need to be addressed. And in my eyes, they are not being looked at as the way they should. But that'll come up in my commentary right after the break. This is Bubba's Bottom Line, Todd Bubba Horwitz, and of course, Patreon.com/Bubba Trading. That's Patreon, Patreon.com/Bubba Trading. We're looking for some donations. I'm not going to hide it. We want to continue to keep this financial literacy for high school students going. We've got 300 high schools now. We want to get to 30,000, but it's going to take capital, and I don't have enough to continue to fund it. So I'm looking for some help, and of course, those who do help, there are certain levels that you'll see when you go to the Patreon.com/Bubba Trading that will tell you what you get for helping out, and part of it will be webinars with me, and part of it will be my signed autographed book. But go check that out, and don't forget to get the Bubba Show every single day at LibertyTalk.fm. You can 2 to 3 Eastern, you can get it live, And also, if you'd like to get daily updates every day from me, you can get those if you go to BUBBATrading.com. All you got to do is fill out the link. It's free. Every day I send you after the close what I saw, what I think is happening for tomorrow. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with more after the break. Welcome back to Bubba's Bottom Line, and it's time for my commentary. Not that the whole show is not commentary, but now I'm telling you that I'm giving you commentary. All right, it's like my Bubba's bitch, right? I bitch the whole time, but I don't tell you until the end, and I give you a special category. All right, so the tax plan, the politicians, and President Trump. All right. Now, as I've said the entire show, having a bunch of politicians out there smiling, shaking hands, and patting each other on the back, to me means that they're going to be grabbing more of my cash. That does not make me happy. The Russell Index does not think that the tax plan is very good. And again, I don't really know. I have not looked at it, but I'm tired of hearing about the postcard. There's already been things proven about the postcard that are not correct of how to file your taxes. Now, I was hoping they would get something that would add some real clarity. And furthermore, is it going to get passed? Is another big question. But if we go to the swamp and we look at what's going on, President Trump, one of his first campaign promises was that he was going to start to work on term limits. Why are we not working on these term limits? I'm tired of looking at Ryan, McConnell, Pelosi, Schumer, name them. All right, they're all garbage. It doesn't matter what side of the aisle you're on. All right, they do not have yours or my best interest when they're negotiating. All right. In fact, I do not know this for a fact, but it would not surprise me that as much as they badmouth Schumer or Pelosi, and as much as those guys come back at the Republicans, that they aren't sitting in a room somewhere together having a glass of scotch and smoking a cigar and saying, hey, how are we going to screw the American people today? What they have done is nothing. What they have done for us is nothing. They have managed to create more taxes for you to pay through different sources, through different ways of trying to get inflation, which is part of the Federal Reserve, which is not part of the government, but they're kind of linked together when they work together on these types of programs. But I want to know, President Trump, when are you going to address these term limits? When are we going to drain this swamp and get rid of all these bums that are in there that have not my interest in heart? Because what we're seeing here is just a continuation of kicking the can down the road, trying to hope that the debt that we are creating will be taken care of by another generation. Well, I got news for you. The way that you're approaching things now will never get out, and eventually the United States could go bankrupt because of it. Because you cannot continue to print what you don't have and just continue to blow up the number. Eventually, somewhere, sometime, it has to come to a head. So we have to, A, make the tax plan clear, all right? Because again, you watch the Russell, that will help you. We've got to drain the swamp. We've got to get rid of these terms, these long terms, because nobody intended for a senator or a congressperson to serve for 20 to 30 years. There should be no more than 4 to 6 years of anybody, including the President of the United States. In my opinion, the President of the United States should be 1 6-year term, because what happens in the way we have 2 4s is by the time he gets done with year 2 or before, he's already campaigning for his second one. And at the end of his second term, he's a lame duck anyways. I mean, it doesn't matter. They're all the same. So when are we going to get this taken care of? And when are we going to take care of the Clintons? Once again, they're top page of the news. This is all the whole political battlefield here that is ridiculous and has done nothing but take out of the pockets and out of the chance of opportunity for the American middle class, which in any class you will find out that without the middle class, you do not have a great economy, because the middle class are the spenders. They're the ones that go out and buy the new products. They're the ones that live by the month. But until you get rid of them, until you get rid of the people that continue to try to destroy them because they can, you're going to have these kind of problems. And that is Bubba's bottom line, and that's my point, and that's what I need to see changed. Anyways, thank you so much for being a part of today's show. This is Todd Bubba Horwitz, Bubba's Bottom Line. Make sure you get the Bubba Show every day, 2 to 3 Eastern at LibertyTalk.fm. And don't forget to get the Bubba's Daily Updates at BubbaTrading.com. Have a great day, everybody. Have a great week. We'll see you back here next week right on Bubba's Bottom Line. Take care, everybody. Thank you so much. We'll see you later.